Welcome everyone to the Kendall Report, where I share my 45 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, I'm going to go through a quarterly update, basically look at the longer term aspects of the markets and try to determine what the setup looks like for the rest of this quarter and possibly into the year. Welcome everyone. It is Sunday night. We're live. Another week ahead of us. Plenty of things going on for sure in the world, but the markets had an interesting week. I was just looking at some of the numbers, and we're looking at year-to-date numbers here right now. S&P down 3.3%. Remember, it was down 21. We're looking at NASDAQ down 6.9. Of course, the favorite Russell is down 9.4. So, this year is just kind of flat as we look back on everything, and it felt so catastrophic all in one day. It was actually started as we declined into that climactic day a few Wednesdays ago now, and then we just saw the markets just rip off the low and now stabilized. And what I'm going to go through tonight, I was just doing some reviews before the show, and I'm still not convinced that we've seen the low for this year. We've certainly have a pattern that I'm looking at that is likely to continue in a very choppy pattern, but I'm not sure that the lows are in, and that is what we'll discuss tonight. We'll look at the quarterly charts. We'll look at some of the long-term stuff. We'll talk, for the most part, a bigger picture. We'll go maybe up to 30,000 feet tonight. And we'll cover some of the short-term stuff to set up this week for sure. But it's just kind of interesting as the markets kind of set up here. I just want to look at something I meant to look at before the show, but just look at the calendar coming up. We got employment numbers, and basically employment was not really better. It showed 175,000, but when they adjusted the previous month, we're pretty much, I think, 135 and expected 125 mostly across the street. As we come into this coming week, though, typically after employment numbers come out, there's not much going on, and that would be the case this week. We are going to get productivity coming out on Thursday. We get the continuing claims and initial claims, and last week we saw a bit of an increase. So there's kind of an underlying tone that employment's starting to deteriorate a bit, but we really haven't seen any material things happen yet. But it's starting to get interesting here from that standpoint. So we really don't have much of anything going on. Like I said, employment numbers were really pretty much like what they were showing before, and we're just seeing, this almost lackluster market after everything we're seeing now. So now some of the things that we're starting to hear about is that China is coming to the table, and is it possible, that they're already breaking down a little bit? I know there's all kinds of rumors. I found a really good channel. I'll mention it in the next couple of days, especially if you want to watch the shipping activity and things like that. People are talking about supply chains and everything. We're going back to 2020, and I don't believe that's the case at all. And I think it's going to be interesting to see what happens here. So I'll talk about that more as we go through the week, but I don't see that as a material situation. So as most of you know, and I'm going to get into, I'll do a quick view of S&P and what's going on. We'll talk about the WaveTech database, and then I'll lead into all the longer term stuff, and we'll see how long it takes to get through this tonight. But the patterns that we're seeing are very, I guess, uncertain, no real directional move coming out of here. And we're starting to see, I've already run the data sheet for the S&P. I'll show you that as well. So we'll go ahead and set that up. As far as, I think the thing that we always have to watch for right now is if there's any noise coming out of the White House. You know, is there something that will happen that will be positive or negative with this China situation? And there's no way to figure that out. So we're just going to have to look at the algorithms. So one of the things that I've been talking about in the Substack, if you don't have the Substack, make sure you get it. It's kendallreport.substack.com, $8 a month. There is a free trial on there for, I think, a week. But, you know, if you kind of look at what we're up against here, is it's going to be, I think the best way to put this, it's going to be step by step as we start to get some of this stuff go. I saw somebody talking about that there's, 50 countries are come to the table. Like, I'm still crying that Jerry Maguire showed me the money because I don't see the deals. I need to see the deals, and that will be helpful, at least giving confidence going forward. And they're talking about those will be the structure for all of the deals going forward, including China and all of that. So let's go ahead. I really don't have any great rants or anything to talk about. I think things will come up as we go through the longer term charts. I've got some ideas that I think will flow once I get into that analysis. But let's go ahead and we'll start here with the let me just get it set up here so you're all set with the WaveTech database. We'll start with the weekly, and weekly is at 25.35. It picked up about 5%, so we did get a bit of a positive rotation to come into the intermediate. There's roughly, I'm just doing this, about 1,400 new entries, and there's very few exits. We're looking at 57 exits. On the daily, we basically are starting to churn here, and this was something I talked about last week. We picked up a net positive from the standpoint of the daily. I'll show you that database here in a minute. But we're basically starting to churn. We're right at 48%, right at one of those metrics I talk about all the time. It just always amazes me that we have 14,000 symbols in this database, and these metrics that almost like clicks like a meter to these numbers that I talk to you about all the time. I guess that's why I've been able to notice that this is the pattern for, I've been looking at this since 1998, technically, even going back to 1996 when we built our first database, nearly 30 years ago. But this patterns that keep flowing here tell us a lot about the forward looking. As I just mentioned, we're at 25% on the intermediate. We need to get above 42 to really start to, where I can start talking about, okay, we're consolidating, possibly going to see some more upside. I think when you see the long-term charts here, there's still a lot of work. I'm stuck on the same scenarios that I've been talking about for weeks now, that there's still an awful lot of work on the weekly models and the weekly configuration before we're going to be ready to even try to move to new highs. Now, once again, we could get news, and what happens. Like I said, right now we're pretty heavy in cash, and most of our portfolios that we run, we're anywhere from 40 to 60% in cash yet. We have seen some strategies start to come back on a little bit from the standpoint of seeing some positive rotation. But, basically we're big time in what we call protect mode, where we have a fair amount of cash around, which changes the beta or the exposure to the markets. And so just looking at, let's go over and take a look at the dailies real quick, and just so I can show you that rotation. So we're at 40.8.56 here. You'll see up above the rotation here. Like I said, it's been pretty. It's negative on 1.2, on 3.2, slightly positive. Nothing really going on there. What's interesting though is that the sectors are starting to look a little better here. We're finally getting some traction. Basic materials, capital goods, all these are starting to get in to their second week of this position on a sector basis, and we're starting to see some positive flow here. Not a lot, 2 or 3%, but these numbers, the typical holding period for these are somewhere between 34 and about 50 days, on just rounding numbers off. So these are the short-term moves that happen within the larger scale. And I'm going to go back to the weekly, just so I want to show you something here. Right now on the weekly, we just have two long positions. One is utilities, which has been long forever. It went long in March of 2024, so over a year ago. It is now a little long in the tooth. It's above its holding period. Let me just zoom in. You can see it's 293 of 261, so it's exceeding its average holding period. So it's definitely long in the tooth, up 30% on the index during that period of time, just on utilities. And if you think about it, utilities is got to be the star. What is the thing that we're short of everywhere, which is energy, right? Whether it's electricity, there's plenty of demand for energy right now, and the utility companies are definitely going to be in a big play. And I talked about this in my 2025 outlook, is that, some of these mini nuclear, micro nuclear plants, nuclear is going to be in play as well. So let's go ahead, and what I'll do for tonight, I will do the short-term outlook for the S&P. I'll unpack that, and then we're going to go into a long-term viewpoint for the balance of the show. So the beginning of each quarter, I like to get into these, at least the longer term trends, see what we're going to look like for at least this month. We'll talk about on the S&P, the quarterly, and generally speaking, on the S&P and the NASDAQ, we're going to continue to have similar type movements. The NASDAQ has a slightly higher beta, but for the most part, they're all going to move together. So let's go ahead and start to unpack on the short term. I believe I have, let me get over to the daily. One of the things that I've been talking about, we're very close, I've been talking about on the Substack newsletter, is that we're getting very close and we're coming to the underside of this 200-day moving average. Now, we rebounded, and this is something to consider for those of you that might be screamingly bullish and talking about new highs from here. We're still a fair piece, even though we're down 3% on the year. We're really, if we go back to the to get back to the high, we've got a fair piece to go, and it's going to take an awful lot, I think, to get through this 200-day moving average. But we're also seeing the algos right here trying to peak from the standpoint of the momentum that we've seen off of that spike low that we had back on that Wednesday. And we're just seeing this continuation. Now we've seen a couple things that I talked about, and we're going to go to a weekly chart, and then I'll show you the data sheet, and then we'll go on to the long-term viewpoint, and I'll run through basically all the markets. I should be able to get through a fair amount tonight. But the bottom line is, what we're looking at is we've seen the big expansion. I talk about, you get the volatility expansion and normalization, then you start to see channels on the market grid. Now we're in an upward channel, and we're starting getting to peak levels from that standpoint. Let me do one thing here, and I've got a lot of monitors in this room. Hang on one second here. And I'm going to bring up this this artifact here. It's making me a little bit nervous. I'm on a Mac, and when it slows down like this, I've got a very powerful computer here, and I'm a little concerned. So hopefully we don't get a glitch in tonight. So right now we have a 75%. I just ran the sheet right before we came live. We have a 75% short-term bearish signal, but it's interesting on some of these market sentiment things that I've programmed in here. So let's just let's just get in and look at this. So we got 75, but this is interesting. Primary trend bullish, but showing short-term weakness. We have a 7 out of a 10 rating, but it's showing that strength is starting to go down a little bit here, and we're looking at a pullback after momentum exhaustion. So so volatility moderate to high. We've got a couple divergences here. And we come down and look at the PPMs, you'll see they're starting to get a little mixed. PPM2, this is an interesting stat I'm about to bring up. This is a short-term daily viewpoint. It's at 0.22, which is just short of a confirmed uptrend. And it has an M here, which is maintenance mode. If it goes to an uptrend, it'd be a plus T in this box. So if you're getting the Substack, I put in every night in Substack, I put in the S&P, NASDAQ, gold, and Bitcoin data sheets here. And let's see what kind of buys it's coming up with here. We're looking at highest probability trade, S1 support test, target 5647, 5680. Put a stop at 5740 is what it's putting out there right now. So that we also have some 85% probability of hitting 5680 on the downside, 65 5647, and then the low target only a 35% probability. So there's a lot going on in this sheet. So this is some of the targets, Fibonacci projections, all of this stuff, and then there's a bit of a review here of what the significant data is. Now I'm working on adding something new to this sheet, which would be an executive summary, which will tell you a bit more. The Substack is basically doing a summarization and building up. I'll go through and do some more in-depth analysis there, but this is what's coming out for right now on the daily configuration. So let's go back and let's start to dig in a bit. And so room's filling up pretty good. One of the things I just want to come up, and this will be my goal going through this, is trying to extrapolate out I'm going to go top down. I'm going to go quarterly, monthly, and then we'll look at the weekly configuration. I'm going to do that on the S&P. I'm not sure I have enough data on NASDAQ. I'll see what I've got here, but I'm going to use what I've got up here right now is the SPX. It is not the futures we're going to go through. So if these numbers sound funny and you get thrown off, because I need the cash to get long enough data to run these, to run the algos and to run the models on this stuff. So let's go ahead and take a look at that. So this is the daily. So let's start with the the quarterly outlook. It's somewhat interesting. I think a couple quarters ago in April of last year, we've got, and when you get this far out and looking at this long term, this gets much more. The ranges that are going to be predicted here are going to be very large. And if you look at what we did just in that last month, I mean, we printed 40, usually pretty good with these numbers, but we printed like 48, 50 roughly in round numbers, and then traded all the way up to 50, 55, right? So that's a pretty big range for just a couple of weeks. And then we start to look at this quarterly chart. We've got, this is the second month of this quarter, so we've got a big reversal pattern. But one of the things perspective that I've been talking about, let's say if we went to new highs and if you looked at the percentage gain off the low, you'd be up around close to 30%. But the fact that you lost 20, it takes more to get back from, percentage-wise to get back from that low point to get back and make a new high. So all of a sudden you have a 30% rally, which people are screaming, they could be screaming right now that you're almost at a bull market if you go off the lows. And I hate that terminology, but the bottom line is all of a sudden you see on this quarterly chart is we have a downward slope to the market grid. So I'm going to draw in the market grid on the quarterly. There's a couple key things I want to point out here, and it'll be easy when I go to the NASDAQ to cover because it'll have these similar type configuration. But we have a couple things. We have the 10-quarter moving average is being projected up right now, and let me just get you some values for that. That's 51.27. We went through it this month. We went through STX on a quarterly, which is usually something that doesn't happen very often. I think here we go. We did one in January of 2020. We had another one of April of 22. And then we had this one we just had here, which would be April of 24. So we've seen those climactic moves happen. And typically when we get beyond that grid number, it's actually technically in itself, that number is an STX, which is the extreme that typically will happen on a quarter by quarter basis volatility, okay? So what we're doing is we're calculating what the normal volatility is. The dots and the numbers in between are Fibonacci relationships between the close of last month and the high of the RTX and then the inverse of the STX. And so we're just looking for trying to find some relative numbers. Now, I'll show you I'm going to bring the indicators into the picture here. And what we're seeing from an indicator standpoint, these numbers, when you get this big, they're at 3.98. And I need to put a calculation in these. You can almost, because of the number, you can move the decimal. So it's a 0.39. It's very strong moving average value that it's moving. So it's moving roughly almost 4% per quarter. And that's a very strong move. But what we're seeing here is that all of the other indicators, if we look down below here, if we just look at the indicators, you can see we basically are starting to see almost divergences across the board. The forecast, the dots are the forecasted move for this indicator. It's forecasting downward. Now, if I come back out, just where my cursor is right here is October of this year. So each bar remembers 3 months. So these are gigantic moves. And it literally, if I come over here to the low, this is January of 27, where my cursor is right now. So that is very extreme from the standpoint, and it's also a long ways off from where we are right now. So this is a lot of times when you start looking at charts this long, it's the opposite. I mean, you get in this what I call a time warp. So now all of a sudden 2 or 3 bars, we're 6 months, 9 months, a year out with 4 bars. So what's happening here is that we're still seeing upward momentum. We are anticipating that momentum will start to bleed off, but it's still going to be strong enough that we should stay above that 10 quarter moving average. Like I said, right now it's 51.27. Let me see if I can get a value on this. It's going up 180 points per quarter. So at the end of this quarter, which will be about 200 points higher than where we are right now on that number. So it'll be, we'll call it 50. We'll just try to make it easy. We'll call it 53.20, and then after that it'll be 56, and that momentum. So what we're seeing is this upward wedge setting up, and once we get, this is the thing, we got to wait till 2 more quarters. So we have to go through May and June. When we come into July, what we'll be looking for is if the market grid, if that channel can turn up or not. And what's interesting, I'll show you on the monthly, and as we step down. So when I do these long-term views, what I like to do is start off at the 30,000 feet. We'll come to the monthly and then down to the weekly, and try to compile what all of that means from the standpoint of trying to fit the puzzle together, because you could actually have a bullish quarterly, a neutral, we'll see what it is, but you could have different aspects of the trend on each one. So let's go ahead, and so when we look at this, we basically went to the extremes, we rebounded. I almost could argue that when we printed down to that, this is cash here, so these numbers are a little bit different than the futures, but the low in the cash was 48.35. So when we went down to that 48 handle, we actually exceeded 50.34 was STX. So the extreme that we went beyond the extreme of the normal volatility, and like I said, we can go back multiple years, and there's only like 2 of these breaches, and very seldom does it get above them. I'm not even sure. There's a couple. I'm looking at the bars here. There's a couple points where we got above. So let's try to get to the point. So it looks like over the next several quarters, momentum will be fading, but it's still in what the way this angle of attack that I use. When you have a high level angle going on, then the probabilities for the market going below the value of that 10 quarter moving average are quite low right now. And if they do go like what we saw earlier in April, we saw that move down and then just a quick snapback. It was almost like it was a mistake. I got to get back up here. So let's go to now let's start to stair step down, and we'll take a look at the monthly. And this is where, for me, I'm still starting to build this story, and I've been talking about this, and that I think we could still continue to fade down. We have some pretty decent support. That spike down, it was so emotional when we saw that spike a couple of weeks ago, went way beyond all of the parameters on just about everything. So we could call that almost an aberration. Maybe I didn't figure out, it might even be a standard D below that number. But the bottom line, what we're doing now as we come into this new month, this is where I start to get a bit concerned. The forecast for the PPM1, which is where my cursor is down here, the forecast for that is suggesting that we're going to get negative numbers on the 10-month moving average. Also, if I just move my cursor here, that's October. And I've been arguing for a while that I think we're going to see negative numbers in the economy as we come into Q3 and 4, possibly carrying into 26. And what all of these indicators are telling us that we're going to roll off. So this is what's interesting about this is the 48, let me get the, the 48, what did I say, 48.35 low, that is likely to be retested. Can we get through it? That's going to be difficult to predict right now. Would be silly to do that. You folks know, I always say investing is like being on an old country road, no moon with your bright lights on. You're just looking for the next corner. And I think what we're seeing right now, as I just showed you on the daily, is we're coming into a little mini corner that we're probably going to backfill into some of these values that I'm talking about. So the 21 month moving average value is 53.43. So that's going to be one of the marks we're going to watch as we go through the month of May. Can we hold the 53.40? There's another 51. If we look at the lows, I think I'll bring that up on a weekly when it comes, but I think there's a 51.80 number that we have to watch. So I think what we're going to see is volatility still remain reasonably high, but a contraction here. I still think there's a lot of work to be done. I'm going to blow this up just a bit. And I want to bring in the, I can't do both of these. One sec. So this is the pattern, just like with you folks have been seeing this if you're new at the channel, but what happens is these orange lines here, these are the extreme values for the period for the market to expand to. And you can see right now it's very wide. And what my expectation here on the monthly, and you'll see it on the weekly as well, is we need to get that contraction. So I've been telling you folks for a while, you get this big wide volatility range and markets are not going to hit those highs and lows. And so what will happen is that we need to normalize the volatility, just like we did going back several weeks ago on the daily. So we need to normalize. Once we normalize, then we'll see if what the retest was. There's a little right shoulder set up, and then we start to get those channels. Now this is monthly, so to get enough bars to do this, we're looking at coming into Q1 of next year easily before this is going to normalize. What that means is the probabilities for making a new high right now is fairly low, but also the probabilities of making new lows are also at the point where we're going to see that contraction, and we're probably not going to make new lows, not new highs. Goes back to the trade I've been telling you, sell the out of money calls and puts on SPY or whatever you're trading, and you should be able to take all that money, possibly for the next several quarters. You should be able to steal that money. It's going to be free money on that from that standpoint. As far as trying to buy things and looking for new highs and getting all bullish like we were in 24 and 23, not very likely at the moment. But this pattern I'm showing you should contract a fair amount from that standpoint. All right, so let's keep going down here. Before I do that, let's just bring up, so you can see all the way into September, the extremes, September into, September, we're looking here maybe into first quarter of 26. So this is not going away anytime soon. Let's go down to the weekly. it's interesting because we're still not getting that contraction yet on the weekly. We are to a point we're seeing the bottom end of this. Let me zoom in on this. The bottom end of this starting to turn up, but we're still getting higher numbers on the weekly. So I need to do something here. I just realized. This is the cash, so it's not updating. Let me go to the futures now. Okay, that's a little. That cash won't calculate until the cash markets open tomorrow. So let's take a look. So yeah, so this is happening. As I was kind of shocked that it wasn't. Then I realized I was on the long-term charts. But this, notice how this bottom, all of a sudden this volatility is contracting substantially, and that's what I was talking about going back maybe 2 or 3 weeks ago, and that's happening now. So same scenario. We're going to. What I'd like to see is this top volatility number start to come in. That's not going to happen until at least next week. We also, if we look at, we have a bit of a crossover. I look at these, you got the 21 crossing the 40. That typically to the downside. A lot of folks would argue that's bearish, but I think that's kind of a bullish cross where we could end up coming up into, I've been talking about this number, 5,800, 5,870 in that range is probably going to be a point where we can still continue on as we come in early this week. Excuse me. But this rising 40 week moving average is also coming through, which is pretty similar to the 200-day. So we're looking at right now the 40, let's see here. Yeah, the 40 is 57.96. So everything is pointing to the 5,800, 5,870. Watch for a rejection from there. We may get a little bit reprieve today. We'll see what kind of, if we can get, what kind of negative numbers we're getting here. I'm just looking here. Yeah, we're starting to sell off as, oh, let me check out something. 1 second. I have too many computers in this room. 1 second. Yeah, so we're down 28 handles right now, 56.80. So that trade's already starting to work that we put out. But the bottom line is, it looks like to me, is that we're looking at coming into maybe back towards the backside of this 10-week moving average, which is 50. Let me get the right numbers here. Yeah, 55.48, is that right? Yeah, 55.48. So that's going to be the number, I think. Numbers that I was talking about were, this is around that 55. This is the number, 51.27, the low of 2 weeks ago is the number you're going to want to watch from the standpoint of the overall configuration. But this, I'll draw in this pattern that I think will continue to happen, and it's just not going to be, this market grid is just going to continue to contract. And once we get here, like I've told you before, this is going to be close. I'm going to give it a range here. It's going to be toward the end of beginning of June to the beginning of July. In this pattern, this is where we're likely to see market just continue in here and it will be in that window that will finally be at a point. At that point, depending on what database and other things are going, that might be a point where there's finally a decision point to go further. Maybe we finally get the database back over 42%. So let me relate. So if you're new to the channel, is one of the things that I have is I have a very large quant database that covers basically 15,000 symbols, so we can get a feel for the internal flow for the markets. And I've talked about this a lot, is you need underlying structure in the markets to be able to get us to that structural point, from having enough symbols, enough stock participating. It's not, you can't go up on 7 stocks. That'll certainly bias the indexes because of the weighting, but you still need that underlying foundation. So I see I'm getting really deep into this just looking at the S&P, and I'm still in the S&P, and we're 40 minutes in. So a lot of detail here, but this is really important to understand. So let's do this. I'm going to break away. We're going to go and look at NASDAQ, and I want to get into the treasuries, because that's going to be a really important element going forward. And then as we go through the week, remember I'm here every day, 8 p.m. As we go through the week, we'll break down some of these markets. But I wanted to go through a deep dive on this S&P just to set up all the patterns so everybody will have a good understanding of what's going on there. All right, so let's go ahead and let's go over to the NASDAQ. We'll stick with the weekly for the moment. It's interesting, the red dot indicator is suggesting we're going to stay in this pattern. And this is probably a perfect segue here, because typically, as you know, I don't use trend lines, but what ends up happening is the metrics around these moving averages form even better triangles and better trading ranges to trade off of than anything. And we still have the 10-week moving average on the NASDAQ is still negative. I'll show you. We're at minus 0.41, so we're still in trend mode down, even though we're trading above that. The 21 right now is at a 0.38, so it's also trend mode down. So what we should see is, like I said, as we get through this week, we'll trade within the range, probably within that. We could trade down toward that 10-week moving average, which is going to put us, let me give you a value here, 19,380. So we could trade down in there, and we'll likely stay below the 20,500 level, 520. We should stay above there and just trade in that range for the week. I think this is going to be a consolidation range. As I mentioned in the opening comments, there's really no news coming out. I didn't look at the earnings that are coming out, but we got all the big boys out there already have done that. So let's move on. I want to go to the treasuries. And we'll stick with weekly at the moment, but I want to go out to the monthly on the treasuries. So you see we spiked down to this is weekly. Last week, 412.33 high. We finished right at the high of the week, and we'll kind of segue into a little bit of Fed talk here, because I don't think the Fed is coming to do anything. Like I said, if they're not going to save the markets, there's nothing to save. The S&P's down 3%. We're down 7% on the NASDAQ. No one cares. There's no emergency going on, right? So, but as we look at this chart here, what we're seeing is a bit of a reversal. We do have a downward slope on the market grid, so We could get up to the 21, which is going to put us probably close to that 340 number that I've been talking about. That is going, yeah, so 320, 342. So the range that I've been talking about the Treasury staying in is extreme 395, for the most part, trading right around the 425 or a little bit above that, get up to 440. We're just going to remain in this range. You can see the forecast going out here with the WTRs forecasting out what the moving averages are going to do, are all coming into a 0 point here, which is 432. So that's kind of the medium point. We're just going to oscillate either side of that on a weekly basis. So let's go out to a monthly. Just real quick, I also want to mention that we still have those live fib targets on the upside, which right now $456, 492, 514. Those are still live fib targets. So let's go out to the monthly here. So monthly sets up this pretty well. We're still in a positive uptrend, and we had crazy fib targets way up here that were generating off of this big pattern. They have failed, and now we've reassessed this. Now the monthly targets are 535, 601, 642. That's these dots right here where my cursor is. Those are somewhat extreme. The first one is basically suggesting a retest of the high values over here at 5%. So there's still a possibility of retesting this. If we look at the PPMs, they're neutral to positive, but they're all in trend mode up. So this is telling us that there's still some upward pressure on yields. And we could also probably argue that the upward pressure is probably just folks selling treasuries. One of the nuclear items that's been talked about, and I've talked about it on this channel several weeks ago, is the probabilities of, China coming in selling treasuries. And there's been, in the real terms, been net sellers of treasuries here for several months, and they could use that as a nuclear option, and that's always out there, depending on where these tariff talks go. That's why it's interesting. Keep an eye on these longer term and these values, because we're looking, like I said, 535 and then 6%. You put 6% on our debt and bring it up. Two things will happen: is that the refinancing that happens literally every week will be ugly, but even uglier will be the balance sheet of the Fed, and that will continue. And remember, one of the sellers that's out on the market is the Fed. They're still doing QT, by the way. People seem to forget about that. So the chances of them lowering rates while they're doing QT, they'd be just smarter just to stop the QT would be the first. We did see them scale that back, and I talked about that would reflect two things, not necessarily the economy, but that the balance sheet was getting at a place where they need to maintain to support the banking system and the economy. And then the other side is that they can use that as a tool. I'll do a air quote tool to kind of soften, to try to be a little more accommodative without being too brass about it. So they have some things that they can just stop QT, and then that will be a bit of a loosener. But even then, I don't see the back end of the yield curve down. So maybe I got really deep into the S&P tonight. So I'll try to cover these things as we go. Now, I won't try. I will cover the rest of the week. I'll dig in. I might pick a market each night, maybe go into more depth on the longer term. But it's pretty obvious here that we've stabilized. You could go back all the way back to 22 is that the long end of the market, the treasuries have stabilized. And like I said, maybe I'll come in and we'll do a yield curve analysis maybe later in the week. But for right now, everything is still going to stay where it's at. The Fed's not going to lower rates. I have still projected 2 drops in interest coming into sometime this year. I mean, we're coming into May here, so maybe when if I'm right about the softness in Q3 and Q4, they may do 2 things. 1, take the QT off, and 2, they maybe drop the front end of the yield curve. I'm still looking for what's called a steepener in the yield curve, and it's basically flat at the moment. There's a couple of dips, but you're looking at front end being 4 1/4 and the back end's 4 1/4. So it's just a very flat. It's still a yield curve, but it's a flat. And so it's very, very neutral from the aspects of what it does. And I've been saying this forever. Well, I'm not going to cover it tonight, but like on the Russell's never going to rally and be in a sustained rally until we get into that steepener formation, and it would be perfect if the front end of the market was 3 1/4 and the back end was 4 1/4. That would be a perfect setup for the Russell. And the reason there's a ton of zombie banks and things into the Russell, it's just a really, unfortunately, in this economy and the world that we live right now, the Russell is just a pretty treacherous environment to be in. There's some good stocks in there, but there, as an index, it's going to have a lot of difficult moving. But yeah, so this will be that. So let's see here. I got 9 minutes to go. Let's go through. Got to cover gold. I'm going to do gold and Bitcoin pretty quick here. I'll go more in depth on these markets here as we go on. And the real key is, folks, after I do these things, get my Substack, which is kendallreport.substack.com. It's $8 a month, and there's a 7-day free trial. So sign up for that. That'll be the best. I do a lot of micro analysis there, plus the data sheets that I showed you earlier will be there as well. Just looking here. Yeah. I always pull up the wrong sheet. This sheet here. So these data sheets will be in that newsletter. One for S&P, one for NASDAQ, gold, and all that. So let's get in and do hit gold real quick. So you're going to leave it here on monthly. I think this will be good. The longer term view on gold is still positive, but what we're looking at is this rally that we've watched, let's say, going all the way back to November of 23 or 22. This rally is somewhat exhausted at this point, and we're likely to go into this rising moving average that's being projected here. So these dots are the projection of where the moving averages are likely to go. They're currently way down here. The 10 period moving average is at 2866. So we're seeing that rise. So I think we're going to see, not this month, but we'll see as we come into June and July, we'll see the market grid turn down, and we should see a consolidation here for gold. I think the runaway this last month when we got into April was kind of an exhaustion from that standpoint. Not predicting that it's going to collapse or anything like that. It's just going to be a consolidation, and I'm pretty good at figuring out there's an old adage of people talk about, is it a consolidation or distribution? I'm pretty good at figuring out whether there's a distribution pattern setting up, which would suggest there'd be more downside. But for right now, whether it's distribution or consolidation doesn't even matter right now. It's just going to be a range bound. Once again, if you own gold, you can probably sell some calls and maybe sell some puts. If you still bullish, you'll just get some more gold. So there's nothing wrong with that. I would still sell all the money out of the monies. I think there's going to be a lot of money in just collecting premium as we go through May and June, maybe even into July on a lot of these markets. And I suspect if we had the time to go through 100 stocks, we'd find those same patterns and same scenarios. So when I'm doing this, if you have our indicators, which is kendallreport.com/indicators24 if you want to check them out. But if you have these, then you want to look for these same patterns that I covered in detail tonight to exist on some of the stocks that you're following and things like that. Because then if you see these same patterns and they're set up the same way, you're going to have the same scenarios around them, which would be, probably if you want to, if you like the stock and you want to continue to own it, then you can just bracket it out and do that. I think with 4 minutes to go, somebody's saying, just real quick, couple comments. The bottom started last month. The bottom is possibly in last month, but we'll see. Okay, we've got a lot to go through. Anything can derail with the environment we're in, and we just don't have the traction. As far as I'm concerned, we got the traction on the database, on the daily database up to 48. So I'm going to go that was definitely a low, and I was saying that then. In fact, before the market went down, I projected that low, that would be the low value around that price. So it just basically now is trying to determine on a longer term basis. And that's why I went through the longer term analysis tonight. That could be a low, but if you buy cheap, you can hang around and own cheap for a long time before you make any money. So our database is basically looking at trending probabilities, not just the bottom. It's looking at more when is the price going to appreciate, so you can stay in cash for a little bit longer and maintain that. So let's do this. I'm not going to have enough time to get into anything else, so let's come back up. Yeah, so appreciate it. I'll continue this long-term scenario as we go through. I'll get through maybe more in depth on some of these other markets, possibly on treasuries. It will go into yield curve. I don't see, just in summary here, I don't see anything major changing in the markets from what we've been seeing. Otherwise, we're locked in this consolidation range. 58.70 bases the S&P, maybe 50, somewhere between 55 with extreme around 53 is going to be the range there. So I think it's going to get a little sloppier. We still got plenty of noise out there and things that can happen. So as always, thanks for everybody showing up. Just looking at a couple of comments here real quick. Let me just see if there's anything. Yeah, we're 1 minute to go, but let me take a look here. Yeah, I see Green Garden. I've been telling you, there's an issue. I'm trying to get an environment that Claude has been. They've just updated all their models, and I've been having a little bit of an issue. And I think I have a fix with things, and hopefully get that template out fairly soon for the data sheets. Anyway, folks, I want to thank everybody for watching. It's great to be back on YouTube again, been consistent. I think this week will complete 1 full month of daily broadcast. So looking forward to tomorrow. See you same time at 8 p.m. tomorrow.